A boost of optimism in European service data helps combat some of the challenges which we're seeing in the manufacturing sector. What does this mean for Europe as a whole? Well, stay tuned to find out more. This morning, the Hamburg Commercial Bank published their Purchasing Managers Index survey. Essentially, this is a survey of a range of different businesses within the services and the manufacturing field. And the survey's intention is to get a feel as to whether businesses are expanding or whether they're contracting. If you get a reading above 50, you're expanding. If it's below 50, we're seeing a contraction there. So what are we seeing in Europe? Well, Europe as a whole, service sectors remain actually very strong. And this is a theme in which we've been observing over the last 12 to 18 months. The index is 53.3 for services, whereas manufacturing is where some of the challenges lie, 45.8. So we're in contraction territory there, but we've been there for some time. Let's look at some specific regions. Let's start off with France. Now, again, similar theme there. It's services which are doing a lot of the work. So the composite, which is both services and manufacturing together, is 52.5, so expansive. That's a good sign. The key strength is services, reading there of 55, and that's actually up from 50 in the previous month. The key aspect which is driving that positivity and that change has been the Olympics and the demand which we've seen for restaurants, hotels, bars and also transportation there. The manufacturing sectors are weaker, and what we've actually observed over the month is a cooling of domestically driven demand. So not so much about exports, it's more about a slowdown of the domestic economy. And these are the sort of considerations which the European Central Bank have when they're thinking about interest rates, and it's been one of the reasons we've seen interest rates come down to try and ease some of the pressure in terms of financial conditions that we're seeing across the European economy. In Germany, very similar scenario there. You've got services data which is in expansive territory, but manufacturing is actually cooling further, so 48.5, and it was 49.1 in the previous month. Now this is quite important for Europe because Germany is one of the key manufacturing hubs. So again, these sort of aspects are really informing how the European Central Bank think about the outlook for economic growth and what that means for their required level of interest rates. Another aspect to bring into focus is the Federal Reserve minutes yesterday. Federal Reserve minutes suggested that there was a pretty unanimous consensus that we're seeing inflation come down towards the 2% target, and actually they see scope for starting to bring interest rates down. If we think back just last month, there was an expectation that in September we could see the first cut, and it could be as much as 0.5%. So normally we see interest rate cuts of around 0.25. And the key aspect which drove that decision or that view of the markets was a weaker employment survey. Now, if we look at what we saw yesterday, we actually had a revision to the non-farm payrolls data, which is published by the Bureau of Labour Statistics. They actually came out and revised the data set on the 12 months to the end of March. And they said, actually, we may have overstated these numbers by as much as 818,000. So the labour market in the US has been very strong, but maybe not as strong as what was initially thought. Now, this is important as it's driving a lot of the views around the requirement for interest rate cuts. We've seen a number of revisions in terms of labour market data over the last number of months. The July reaction was quite strong. The reaction yesterday was relatively modest, actually. So a relatively modest reaction, muted reaction in terms of that revision, but it will be a consideration in terms of the thoughts and the guidance set out by central banks. That's all for today. So a few aspects from Europe and the US. I hope you found that useful. Please do stay tuned and dial in tomorrow for more in markets. Thank you for watching.